This is the briefing for Friday, September 20th. As I've said several times prior to Fed announcements, and I covered this week to subscribers for the briefing, it is often that we get a lot of volatility at the day of the Fed announcement and during the press conference, which you can see right here is what happened on Wednesday. And then it is often not as greatly so, but it's often that traders will end the day on a Fed announcement in one direction and then rethink where value is and completely retrace the move that closed on the day of the Fed announcement. And that's exactly what happened yesterday. And you can see we were testing the lower extreme of this area of rotation going into the close on Wednesday. And of course, this is Thursday. We opened up, so value, the determination of value certainly changed overnight with traders and investors. And then we continued to see a push higher into new all-time highs for the spiders in the 573 area. By the way, this is a 15-minute chart of the spiders, and this is a 15-minute chart of the Qs. Same thing happened with the NASDAQ, testing the lower extreme, then of course a gap up, follow through, testing the 486 area. And then what we got today was we got a rotation back to the downside. Now, in last night's briefing, I talked about this buying tail. You can see that we opened higher yesterday, then we got this sell-off, and it appeared that we were going to continue the sell-off and that potentially we were going to see this whole gap retraced, or at least a test of the 566 area, which was the next downside support level. And I stated that if this convictive buying is not defended, if the traders who bought from here to here didn't defend this price when it started to retrace again, then that would suggest potentially a retest of this breakout point. And that's exactly what happened in today's trading. You can see this was the close of yesterday, and today we got a gap down. This was not defended. We had a test of the 566 area and then of course a bounce up. This is the 568 area right through here, which is this low. And we traded slightly above it and then came back and retested it once again. The same thing happened with the Qs. We didn't quite retrace all of the gap, as we didn't retrace all of the gap in the spiders. But you can see this buying tail here was not defended, came down, traded through 480, and it appeared that it was going to test the 477 area before we got this three-step counter trend rotation. Or at least it appears to be a three-step counter trend rotation to this move to the downside that we saw in today's trading. Volume spiked going into the close today, just as it did yesterday. It's very interesting, but today was option expiration day, monthly option expiration day, so we always get volume spikes on Fridays when we have options expiring. So basically, what's going to be important in the short term tomorrow is going to be this 568, on Monday, is this 568 level in the spiders and the 480 level in the Qs. Now, if that's traded through, then that's going to open up a test of the 477 area in the Qs and 566 area. And if that's traded through, then we're back in rotation, back through this range again, looking at the 560 area in the spiders and the 470 area in the Qs. Now, it's very interesting. I kind of got a little bit excited today because when I saw this here, this was yesterday's trading, and I pointed out the selling tail and the buying tail and in the gap up. Now, what this appeared to be initially, and that's why I got a little bit excited, was this appeared to be an island reversal. In other words, you have a gap up above the high of the previous day and then a gap down below the low of the previous day. And that actually didn't happen. You can see that we retraced slightly down, trading into this selling tail from Wednesday, and then we traded higher today into the selling tail from yesterday. So it's not an island reversal, but it certainly does look kind of pretty right there. So we'll determine whether it's going to be something significant or a signal of something significant or not in Monday's trading. Trading through today's low in the spiders and trading through this 565 area would suggest then that this potentially is a false breakout, and we're headed down to test the 556 area, which is this next level of support. Below that is 540. Now you can see volume slacked off slightly today, but I'm not going to give much credence to that. Going into yesterday, 52-week highs minus 52-week lows expanded nicely, but it declined today, which is typical because if this was a counter trend move, and I'll get to the overbought condition of the market, if this is a counter trend move, then typically they happen on lower volume, and we do see declining internals. That helps work off the overbought condition. Looking at the Qs, you can see the intermarket divergence. Qs are nowhere close to taking out the all-time highs. This is the 488 area in the Qs, which is the next upside resistance. We came close to testing it in yesterday's trading, and then of course you can see the decline that we saw today. Volume falling off once again, and breadth falling off as well. Now I should say that yesterday's gap up, the market internals were fairly strong. It was very impressive from an internal perspective, but as to whether it can hold, I guess I thought we'd find out more today, but it looks like it's going to be Monday to determine whether we're going to see a test of support, which is 470 in the Qs, and then below that is 450 in the Qs as well. In the Russell, you can see the Russell has traded back through this support level of 223. You can see a little bit of volatility in the IWM. Selling or a buying tail came in yesterday that drove prices back up again, and then we traded back down through this 223 level. Once again, closing at the low of the day in the IWM suggests potentially follow through in Monday's trading, but the next level of support comes in right around 215, which is going to be a very important area in terms of the Russell. Now, in terms of being overbought and oversold, yesterday we were extremely overbought, and I pointed that out in the briefing and suggested that because of yesterday's move, we potentially could see some type of a pause or some type of a counter trend rotation to the downside, and that's exactly what we got. So basically we're neutral right now. So this allows the market to go in either direction, and higher probability suggests that we potentially would go up since we worked off an overbought condition very quickly in one day, and we did it on declining volume, which suggests also that it is typically a counter trend rotation. The key is going to be the support levels that I pointed out. This 565 level in the spiders. Trading below that is going to suggest something else is going on. Trading below today's low in the Qs is going to open up a potential test of 470, and then of course in the Russell, trading below today's low is going to open up potential test of the 215 area. Once again, if we trade above today's high, that's the alternate potential reality that we are going higher and we're going to be testing upside resistance. So we have some pretty good short-term key reference areas to watch going forward. Total volume, I almost hate to show this chart, but you can see here, this is total volume on the NYSE, really not reflective of what's really happening because there's option expiration, and we always get a volume spike on option expiration Fridays. And the same thing with the NASDAQ, you can see the volume spike there. So that's really no help in our analysis. Now, looking at the percentage of stocks above their 50 and 200-day moving averages, you can see that we were in a pretty good decline here as the market was moving higher, which suggested that there was a pretty good divergence and we were going to see some type of move to the downside, which is exactly what we got right through here, and you can see that move right there. Now, in that move, we got the divergence again because you can see that the percentage of stocks above the 50 and 200-day moving average started increasing. So that does suggest that the market is strengthening from an overall perspective without giving any credence to higher weighted stocks. Now that's in the S&P 500. In the NASDAQ, you can see that we've got basically the same thing. We have the decline or the divergence in stocks above the 50 and 200-day moving averages. Then we get this increase as we decline, which suggested that this was counter trend and another move higher was in the offing. And then of course we got this expansion. But if we look at this now, you can see we're getting a little bit of divergence in here as this move tries to climb higher. We're seeing a little bit of divergence. Same thing here. You can see this is still below trend on the 200-day moving average. And in the Russell, we have basically the same thing. You can see the divergence that's occurred once again. You can see that it occurred right there. And then the 200-day moving average, we got the same thing happening as well. So most important is going to be the intermarket divergences between the S&Ps, the NASDAQ, and the Russell. And certainly what happens with the S&P is going to be most important, because you can see it is leading right now the other indices, and holding above today's low is going to be very important for Monday for all of the indices going forward. So use a little bit of caution going into Monday. I think the market is still trying to determine whether value is higher or lower, and they could certainly change their minds on Monday. I don't see anything unless there's some surprise event that occurs between now and the election that would cause this market to decline further, unless there's some economic numbers that come out that suggest the recession, or the supposed recession that we're heading into, is worse or getting worse. So basically, watch these support levels very carefully. If they hold, then we want to be leaning long. If they are broken through, then potentially we are looking at some type of additional move to the downside that could be greater in degree of time and price. Watch the internals always on any breakout, especially a breakout of the short-term internals. Have a great weekend, and I'll pick this back up for subscribers on Monday.